I'm Lawrence Wintermeyer, and welcome to FinTech TV at Abu Dhabi Finance Week. I am so delighted to be joined by Solomon Tesfaye from Aptos, who's the Chief Business Officer.
That's correct.
Welcome.
Thanks for having me.
And it's great to meet you in person.
That's right. I feel like it was inevitable at this point how many conversations we've had over the years.
Exactly. So tell us, what are the big things going on at Aptos right now?
So Aptos is right now hyper-focused on three things within global trading engine: money movement, data on chain, and basically when it comes to just capital markets holistically.
Now, when we look at all of the narrative that's going on here at ADFW between crypto and real-world assets, walk us through the two or three big trends that you're seeing and how they relate to the Aptos infrastructure.
So at this point, look back at all the times I've been to Abu Dhabi. Really, at this point, they're focused on really timelines to actually integrate stablecoins and RWAs and actual specific applications. Historically, it was whether or they're actually going to pursue blockchain in general. Now it's actually more definitive. And so on the RWA side, really they're focused on money market funds and private credit, and then traditionally very liquid assets that they're trying to bring on chain. And on the stablecoin side, it's basically instant settlements attracting everybody, whether it's remittance, microfinance, or cross-border transactions.
Yeah, and you were speaking to some of my colleagues on stage this morning. Of all things, in the institutional space, it seems that tokenized money market funds and collateral eligibility, the use case, while in the retail environment, stablecoins really continue to be the use case and have high utility across every segment. Where are we seeing some of the real world assets in the middle? The US folks are always talking about tokenizing, public securities, and we're waiting for the SEC on that. There's always the promise of private security tokenization, but what's your take on the way that roadmap is evolving?
So stablecoins definitely have the strongest product market fit at this point. So I think you're going to continue to see throughout the next 12 to 18 months, greater applications. I mentioned remittance, microfinance, but also payroll. And other B2B transactions are going to be brought on chain. On the RWA side specifically, which has been growing at a rapid clip, aside from money market funds and private credit, you're seeing people really focus on just traditionally liquid assets as opposed to necessarily only focusing on private assets. They realize that building liquidity for these private assets is going to take a lot of time. And so right now they're just trying to create that connectivity between whether it be the public markets, the commodities markets, basically very liquid markets and on-chain activity.
I love that. And that, follow the money. So the guidance is where the liquidity will always reveal the killer use cases.
That's right.
In this space. And let's just wrap up with the microfinance space. I know we're here, I call Abu Dhabi Middle Earth, but the microfinance use cases, particularly as you go further south into sub-Saharan Africa or East in Asia, look to be massive from my perspective. What's your thinking around that?
So we have a number of builders on Aptos that are focused on that exact use case, one of which is Pact Foundation. So Pact Foundation has put billions of microfinancing loans on chain, and loans between 50,000 to 100,000 for the most part. And just given the nature of Aptos, the lowest cost blockchain, the fastest blockchain, they have decided to build on Aptos and basically scale this out. It's really a game changer. This is a real world application in terms of the recipients are mostly SMEs that are receiving these loans in real time. And they've put this fully on chain, the full life cycle from origination to actual repayments, the full waterfall, as well as the covenants are completely on chain.
I love that because that is Web3 capital creation. It's economic growth, and you're putting it in the hands of the people. You don't need the state for it, which is one of the exciting things we're seeing emerge in this part of the course. Solomon Tesfaye, what an absolute pleasure to catch up with you today. Thank you for joining us here at FinTech TV.
The pleasure's all mine. Thanks for having me.